What's up, everybody? My name is Demetri Kofinas, and you're listening to Hidden Forces, a podcast that inspires investors, entrepreneurs, and everyday citizens to challenge consensus narratives and to learn how to think critically about the systems of power shaping our world. My guest in this episode of Hidden Forces is Michael Nicoletos, the founder and CEO of DeFi Advisors, an independent investment advisory firm specializing in macro and digital assets. Michael and I spend the first 20 minutes or so of our conversation discussing his personal biography, including his time living and working in the United States and what that experience taught him about America's capacity to change and why its embrace of failure is critical to its continual economic, cultural, and political renewal. We spend the rest of the first hour discussing something that Michael and I talk often about in private: dollar doomerism, the perennial anxiety particularly prevalent in American circles and among American media pundits that the United States dollar is on the precipice of some kind of collapse or devaluation. The sources of this doomerism, its merits, and what proponents of this view seem to get consistently wrong is what we spend most of the rest of the first hour discussing. This also leads us to a conversation about the euro and a potential BRICS currency, as well as a discussion about the long-term direction for interest rates and inflation. Our conversation in the second hour focuses mainly on geopolitics, including the national security challenges facing European member states over the war in Ukraine, as well as U.S. preparations for a war over Taiwan, and how both of these dynamics are impacting and being impacted by a resurgence in American isolationism. We also discuss the state of China's economy, the need to rebalance the power dynamic between labor and capital, and why there are reasons to be hopeful about the future. This was another excellent in-person conversation about a series of topics that we've covered extensively on the podcast for years. If you want access to all of today's conversation and you're not already subscribed to Hidden Forces, you can join our premium feed and listen to the second hour of today's episode by going to hiddenforces.io/subscribe. All of our content tiers give you access to our premium feed, which you can listen to on your mobile device using your favorite podcast app, just like you're listening to this episode right now. If you want to join in on the conversation and become a member of the Hidden Forces Genius community, which includes Q&A calls with guests, access to special research and analysis, in-person events, and dinners, you can also do that on our subscriber page. And if you still have questions, feel free to send an email to info@hiddenforces.io, and I or someone from our team will get right back to you. And with that, please enjoy this excellent and timely conversation with my guest, Michael Nicoletos. Michael Nicoletos, welcome to Hidden Forces.
Nice to be here, Demetri. It's great to see you in person in Greece. Amazing.
Yeah, you were one of the first people that we hung out with when we first got here. I've been in Greece. The audience doesn't actually know this. I mean, they know that I did one recording in this same studio here in Athens with Le Shrub like about a month ago or so. But I've been living here since middle of May, and today is actually our second to last day in Athens. We've been here for over 100 days.
I hope you enjoyed your 100 days
great.
in Athens.
Yeah, I mean, as you know, we worked a lot, but we got to travel on some weekends and go away. But it was an awesome experience. I got to see a lot of friends and family and make new friends and hang out with people, in your case, people that I've known for a long time over the internet, but never got to hang out with in person. So
the amazing thing about the social media, which, a lot of people are talking about in a negative way, I've had the opportunity to meet a lot of people through Twitter. I'd say because I use mostly Twitter, but I've had the opportunity through Twitter to meet a lot of people, and it's been fascinating because you meet people from around the world. When you talk about a specific subject, whatever that be, and you have a conversation, at some point, you feel closer to the person you've never met.
Mm.
And I think this is one of our case, I would say, started through Twitter. And I think it's one of these cases where you get to meet someone in person, actually, and it's really great.
Yeah, dude, I totally agree. Actually, I've been saying this for a while, that one of the wonderful things about the modern world that we live in today is this ability to develop relationships, disembodied relationships from afar with people. And because of all the tools that the internet and what it affords you, you can engage with ideas with those people, engage with them in conversation, and share time together in a way that you couldn't in the past. And then you have a chance to meet them in person, much later. And that's a really cool experience,
I think it's fascinating because we talk only about the negatives of the social media. And I think there are a lot of positives.
There are positives.
There are a lot of, I don't think we would ever meet like this, you and I'd say, if it wasn't for a social media platform.
Totally, yeah.
We had a discussion, we had a debate about the subject. We agreed, disagreed, because Twitter can be a bit polarizing, I would say. But if you can be civilized and have a real discussion, which sometimes occurs on Twitter, it's rare because usually it goes it goes crazy.
Yeah.
I think you have the opportunity to talk with people. And then after you've had a few discussions, these people on both ways feel comfortable in picking up the phone if you need, or sending an email, and then taking the relationship to another level and the discussion to another level. I've had a lot of people which I shared research. They've shared research with me. I've met people which I wouldn't have met. It's great. It's great. If you use it the right way, look, like everything, I think, if you can use it the right way, it's super beneficial.
Yeah, man. I think just to reiterate that, the in-person conversation and the in-person relationship is much more tolerant of divergent views than it is on Twitter,
Yeah.
And you and I were brought together, I think, because of our mutual frustration with perennial US dollar bears.
Yes.
Which I'm sure we'll have a chance to talk about. But before we do that,
sure.
Well, let's get, I would love for our listeners to have a chance to get to know you if they're not familiar with you already. So first of all, what do you do? And tell me kind of the arc of your life, how you got to here. Like, what did you study in school? What led to your development to becoming a fund manager?
I went to a Greek high school. I went to study in the States at Boston University in 1995, where I started as an economics major. I wanted to study economics, so studied economics. But during school, which this is a good thing about the U.S. educational system, a lot of people are, saying good things, bad things. But the good thing is that when you're 18, you actually don't know what you're going to do. You might think you know what you're going to do, but it's highly unlikely that you know what exactly you're going to do. So I took a history class, and then I did a double major in international relations, which I found it even more fascinating than economics. And I think combining history and economics and international relations gives you a very good top-down perspective about the world and the situations that occurred during history. And I did also a minor in business, finance. Then I came back to do my military service for 2 years in Greece. Another experience, which is, I'd say, very interesting. And then I went to Italy, to Bocconi, to do my master's in finance. And after that, I went to work for the World Bank in Washington, D.C. I quickly figured out that this was not something for me. I wanted something with more, let's say,
faster pace.
Faster pace. The 20-year projects, it's not for me. I understand their value, but it's too far away from me.
What year are we talking about now? When did you go
2003.
to DC? 2003 you were in DC. So 2 years after 9/11.
Yeah. And then I went to New York to find a job. It was very hard then. So I came back to Greece. I was fooling around. Now this is a funny story. So a company doing elevators, Schindler, hired me to be a financial controller. Tried that for 6 months. It was, again, not something that I wanted to do. And then one day there was an opening at the Greek bank for a brokerage position. And I went for the interview, and I got hired to do trading, not Greek stocks, global stocks, international stocks. So I got into that through that avenue. Spent 6 years in Eurobank, became the head of the department for the international equities. And that's how I got into that space. And I had the opportunity to be, I don't know, sometimes it's luck, sometimes it's the right moment, sometimes it's, you've done the work and it hits you on the right spot. So I had done the work about the US financial system, and I had realized, and there was an article in The Economist in 2007, I think it was August 2007, where it had the balance sheets of all the US banks. And reading it one day at the office, I didn't have a lot of work, so I was reading the article, and I saw that Lehman was levered 100 to 1. I'm like, 100 to 1? What the hell? And suddenly I start seeing real estate prices coming down. And it didn't take rocket science to understand what was coming. So I reduced all the positions of all my clients. I went short. And I would say for my clientele, the Lehman crisis went well in terms of, they made money. They didn't lose money, which was a huge advantage. And speaking with some investors, they said, why don't you do a fund? Say, why not? So I left in 2010. And I started my own fund with a partner, Demetris, by the way, the same name with you. And we started from Greece. Then I moved, it was a long, short emerging markets fund. My background in history, international relations, economics, and being a broker was all combined into one because, as you know, emerging markets, there's a lot of macro work to be done. It's not only stock specific. You need to understand the economics and the economics of each country. So I came from that side. And then I went to London and opened an office, became FCA regulated and everything. And after 9 years of doing that and seeing what was happening in the world in terms of central banks pumping money, valuations were ridiculously high.
What year are we now?
Now we've gone to 2019. So valuations were too high. I wanted to be short everything, but I understood that central banks were here to keep printing. And it was a combination of the fact that I was really frustrated with how the market was functioning and with the fact that I hadn't slept for 15 years. Because when you run a hedge fund and when you run a fund, especially an emerging markets fund, you don't sleep. I can tell you numerous stories where I've woken up at 5 o'clock in the morning and I've seen, for example, I was on vacation and I saw that Putin had invaded Crimea and had a 25% position long in Russia. Have you seen those cartoons that get up on bed and start walking in on air? That was me, going back to the office at 5 o'clock in the morning from the middle of Greece to the office in Athens. So there are a lot of sleepless nights. And I said, okay, I've done this. Let's take a year. Let me take a sabbatical and figure it out and relax a bit and travel.
Did you feel comfortable making that decision? And was it easy for you to take time off without feeling anxious to need to do something?
I'll tell you something which I figured, and it happened twice in my life. And actually, this is really, I don't want to be... Steve Jobs once said, I don't know, if you wake up too many mornings and you're not happy about what you're doing, and this keeps happening for a long time, then you're doing something wrong. And both times when I left the bank, which I was not happy anymore, and at that point, I was not waking up in the morning excited to go to work. And knowing me, I never thought my job was a job. I liked what I was doing. So it was not the sense, oh my God, I have to go to work tomorrow. I loved it. I did it at home. I did it everywhere. So it was like doing what you like on a daily basis. And that feeling had stopped. And with the frustration that I just mentioned before, it was a combination of factors. So I decided that, okay, I need a break. So it was a hard decision, but one of these decisions which I felt very comfortable. But by the time the fund shut down, COVID hit the world. So my sabbatical in traveling the world, as I like to say, became Netflix. Okay, no, not exactly, but you understand, I was locked up. So I was in London and I decided to get locked up in Greece. Better weather.
They were doing repatriation flights at the time, early on?
It was a beginning. I saw it coming and I came to Greece. It was
okay, I see.
So I came to Greece. And
so what, January 2020 or something?
No, that's about March or April.
I see.
It's when it starts.
So it was hitting. It was already in Italy. It was.
Yeah. So I came back to Greece. There wasn't much to do, everyone's locked up, but everyone was walking at nights. I think it was a nice social experiment. A lot of people started exercising, which they didn't. You would see people outside walking. You would meet people on the walks. It was interesting. And spending a lot of time at home, I started spending a lot of time reading about crypto. Because I was looking at the frenziness. I said, okay, I need to understand this. I need to see what's going on here. So I spent a lot of time reading and understanding it, opening accounts, trading, wallets, the full thing, because I am the opinion that unless you do it, you won't understand it. And even if you do it, it takes time for you to understand and how it works and the mechanics. I did everything, bought crypto, bought NFTs, got hacked, lost the NFT. I've gone through the whole phase, which is a very nice experience, very interesting because you understand what the goods and the bads are. And I think that this ecosystem here is to stay. Maybe not the way it is today, but I'm pretty convinced that crypto in the broader space and blockchain are here to stay. There's no way of going back. I feel like more that it's like the dot-com bust. When the dot-com bust, went in 2000, 2001, the internet didn't die. A few companies died because they were overvalued and highly leveraged. I think the same thing. And now we have the clearing mechanism, and we'll see which stories stick and which stories don't stick.
And we're starting to get some regulatory clarity now too, it seems.
Well, the regulation, look, you don't regulate something you're planning to ban. So I think regulation is good. You don't tax something you're planning to ban. So if you're taxing it and if you're regulating it, it means it's here to stay. Maybe the dreamers which want something utopic and think that crypto is an anti-systemic, anti-governmental, whatever you want to call it, a new thing, probably are going to get disappointed. But I think as a mechanics, as a technology, as the things that it has to offer, it's here to stay. So I did a lot of work on that. Been spending some time to see if there's something to do in that space. In the meantime, being in Greece, there was a firm which hired me to help them with their M&A process and capital raising they were doing. So I spent some time doing this in Greece. So since then, I've been in Greece, which is not that bad. And I've been doing different projects. I've been investing in a few startups. I've been meeting all these new people in Greece, which after the crisis have started. There's a lot of young people, which most people know that Greece went through a 10-year depression, I would say. And now things are much better. There's much more optimism. You see young people trying, even if they're failing. It's not bad. But there are ideas out there. Again, there are bad ideas, but it's very important for Greece, at least. There's a shift in culture. Because in Greece, the culture of failure was very, very deep rooted. So if someone failed, let's say, if you were fired from your job, if your firm was shut down, the family would say, oh my God, how horrible this is. What's going to happen to you? The family bonding was so strong that it created a false attitude towards the younger generation of failure is a bad thing. Coming from the US, that failure is a good thing. The more times you fail, the more experience you have, the more things you know, the less fearful you are because you know you can do it again. This culture is starting to come to Greece now, and this is very positive. And I think that if it continues, we could have in the next 15 years, 20 years, because from the culture shift to seeing it, it will take 1 or 2 generations. But I think we've seen a big shift.
I mean, the last 10 years are the first time in my life where I saw people genuinely coming back to live here. And you're right, the attitude has also changed substantially. I mean, you mentioned it when you were talking about education and going to BU and getting a college degree and going and embracing the idea. I mean, that's how you approached it, embracing the uncertainty of what you want to study in your life. That was very different than the way we grew up and the expectations and the Greek school system to actually have it figured out by the time you go to college and know what you're going to study and what your life's going to look like.
I have to thank my parents for that because I was too young to understand. And my parents said, we think you should go study at the US. I'd say I owed that to them. They were pretty ahead of their time, or I don't know how you're going to call it for a Greek culture.
And that wasn't even necessarily that could be looked down upon, right? Because a lot of people would think that you went to study in the US because you weren't smart enough to get into a great college here.
Look, going into a Greek college is very tough. The system is very, very tough. You can make that argument in sense of entering. In Greece, the hard part is entering the university. The easy part is getting out. In the US, it's hard to get in, but it's hard to get out as well. It's not just you get in, okay, now you're done.
And there's more embracive work in the US too, whereas like in Greece, this sort of perennial education is something that a lot of people have engaged in.
And another thing that didn't happen in Greece, and now I think it's changing, the Greek educational system was not teaching you how to work in teams. It was more of an individual. You study in your room, you learn something, you write an exam, fine. When I went to the US, which was hard for me in the beginning, but then, as it went forward, I became really acquainted with, is teamwork. And I think you can't go far without a team. And having a good team is very, very crucial. And I learned to work with teams in the US, which, everything is a group meeting. And in the beginning, it's very frustrating when you've learned to do everything on your own. Again, a group meeting, again, I have to talk with another 5 people. And I think that was a huge shift in my mindset. And I think this shift is now happening in Greece, mainly because of this change in culture and because of all the startup buzz that started in Greece. Again, but all these young people understand that they need to be in groups and they cannot do it alone. And this is very, very optimistic. And now we have a government which is pro-business, much more structured. Thankfully, we've gone through pretty bad governments in Greece. And it's like a perfect storm, but in a good way, not in a bad way. So all the stars are aligned. And I think that Greece can do very well in the next years if it manages to take advantage of this shift. So that's where I am now, advising companies, doing some investment in some startups to understand this landscape.
The ecosystem.
Doing a work on crypto, doing a few M&As in Greece, and always thinking about the next day. I think I'm an entrepreneur at heart. I always want to do new things. So if anyone has a good idea, I'm up for it. So this is it.
So just one more question on this, and then we'll kind of zoom out to discuss the macro picture, and then we can zoom in again to talk about Greece maybe in the second hour. So you spent your entire life outside Greece from 18 to until recently, if I understood correctly, right? You were living in
from
New
18
York,
years old.
From 18 years old
yeah.
to the 2020, the last year, however old you were then, the last however many years, or did you live in Greece for any period of time?
No, I lived 4 years in the US, 2 years in Greece, 1 year in Italy, 2 years in the US, back to Greece.
Okay.
And then after many years, back to London for 6-7 years, and then back to Greece.
Okay, because my question was going to be, what has led you to stay here after having spent so much time abroad? But it looks like you had spent a lot of time back in Greece. So, all right, so let me, like I said, I do want to, again, maybe later on, talk about something else that I think is interesting, which is to compare the culture. What is it about America, especially as someone that has spent so much time living outside of America and being born and raised outside the U.S., what is it about American culture that you think works particularly well and what maybe doesn't?
I think there are a lot of bad things about America, and I understand the frustration that's going on now. But if I had to put two things that I think the U.S. thrives, A, it embraces failure. And when you fail, it's a badge of honor. It's not a stigma. This is very important because culturally people have no fear of failing and they know that this is going to help them down the road. And the second thing, which I'd say this is a micro, and a macro factor is the US as a US adjusts very, very fast. And I think, is it Winston Churchill or who said this? We can bet that America is going to do the right thing after it's tried everything else.
Mm-hmm. Roughly, yeah.
Yeah. So I think the US will adjust and will adjust and will adjust and will adjust and will figure it out. And this is something which it's fascinating to me. Again, another quote by Winston Churchill is, to change is to improve, to change often is to be perfect. So I think the US culture to change and to constantly change is something that's taken the US where it is today, with all its pros and cons and, with all the issues that are going on. But as a non-American who has lived in different countries, and I understand why Americans have the frustration about the US right now, politically, socially, and everything. I'm not minimizing or disputing their anger or their... But I've lived in other countries which do not have the US dollar. And this is probably a discussion we're going to have down the road today. But the luxury of having the US dollar cannot be understated as your currency. Cannot be understated. And with all its faults and problems, having the US dollar is a luxury. I've been in Greece with the drachma, which used to be devalued 20%. I've traded Turkey, which has devaluations all the time. I've had Egypt when there was a coup and you could not convert your currency and you could not find anything. I have seen the Russian ruble collapse. I've seen so many emerging markets through my experience as a hedge fund manager collapse. And if you haven't gone through that process and seen it, either professionally or, in your daily life, you cannot understand the power and the value of having the US dollar and feeling every day safe that your currency is wanted by everyone else outside your world. Now, there are different mechanics that play out, and it's more tricky if we go into the details of how the system functions. But in essence, everyone wants dollars. 87% of world trade is in dollars. Yes, okay, there are headlines that saying that the BRICS are going to do something. Okay, we're far away from that. Who wants to hold renminbi? Who wants to hold Indian rupees? Who wants to hold Russian rubles instead of US dollars? It's nice to say it. The end of the story is, do you want to hold them? And if you hold them and you have rubles and you have Indian rupees and you have Chinese yuan, okay, let's say you have a substantial amount of these. What are you going to do? You're going to invest in their markets? You're going to buy their treasury bills? And what are you going to do? You're going to have Russian bonds, Chinese bonds, and Indian bonds and feel comfortable at night? You have a currency risk and you have also a country risk. So it's nice to have this discussion. And I think it's valuable to have this discussion because it puts things in context. And I think it puts some pressure on the US to be fiscally more responsible, because if it continues that path, definitely at some point there's going to be a problem. But I think we're many, many years away from something happening where the dollar is not the center of our system. And I think a lot of people in the US underestimate what they have and the luxury they have having the dollar with all its problems. And don't take me wrong, I'm not saying it's perfect. I'm saying I'm saying it's, how do you call it? The less clean shirt.
The cleanest dirty shirt.
The cleanest dirty shirt.
So you took us here. Let's follow this thread here. What do you think it is in people's frameworks, people who sort of for years now have been sort of calling for the end of the dollar, or saying that there's going to be some kind of sudden devaluation, or that somehow people are going to suddenly realize that the emperor has no clothes, right? There is this sort of sense that people have, this foreboding. What is it in their framework that you think they get fundamentally wrong, which allows them to make this kind of analysis year after year?
The interesting part in your question is that most people that I've come across that have that bearish outlook for the US tend to be Americans, which is fascinating to me. And I think the Americans that feel that way, in terms, I want to clarify something. In terms of the demise of the dollar, because we're going to have fluctuations, the dollar will go lower, the dollar will go higher. That's a trading view. I'm not saying about traders which think that the dollar might devalue 10% next year and then it's going to go back up. That's a trading view and it has to do with other stuff. I'm talking about the people who believe that the end of the dollar has started and we're at the beginning of the end, and eventually the dollar will cease to be the global reserve currency. I'm talking about this crowd.
Mm-hmm. And also that's so undefined, right? I mean, like at some point the dollar will cease to be the global reserve currency, but it's not really what people mean when they say that. There's a sense of proximity.
Yeah, they feel it's closer than...
It's imminent.
They feel it's imminent, yes. And every headline on every newspaper makes that feeling of imminency even stronger. So, the BRICS announced something that more countries want to come into BRICS. Suddenly we're there. It's happening. Next week, not next week, but it feels like it's coming. It's around the corner, let's say.
And it gets a lot of play. I mean, Tucker Carlson, for example, talks about that on his show, and his show is like one of the most popular, if not the most popular news program in America.
Okay, but again, Americans.
Yes, Americans.
And
absolutely.
Americans, so let's say that we take the US in isolation and we see the debt and we see the deficit and we see all the inequality and we see the pension crisis that will occur with the baby boomers retiring and everything. And you look the US in isolation, clearly, you're going to get scared. And clearly you're going to say, that's it. The dollar is screwed. The problem here, and that's the argument I've been trying to make on Twitter, and every time I have a discussion with someone who has the other opinion, currencies are a relative game, are not an absolute game. So if the US is doing that bad, you need another currency to be doing better, and you need the people of the world to start feeling more comfortable with that currency. Now, let me give you an example. And that came across when the Ukraine crisis happened and everyone blocked the Russian ruble and the ruble put capital controls, and then suddenly the ruble appreciated. And I had everyone telling me Russia is backed by gold and hence there's no debt and the ruble will overcome the US dollar and yada, yada, yada. Okay. First of all, what the screen says on the currency is irrelevant to what the market says. If you went to Russia and you offered dollars, there was a 20% premium for that dollar. So everyone was looking for dollars. So clearly, the price you were looking on the screen was not the real price of what the market was pricing. Secondly, you could not do it in size. You could not do it in size. If you're a Russian local and you want to buy $5 million, no way in hell. So again, what we see on the screen does not always translate to what translates in the economy. And again, someone would argue that Russia has no debt, has a lot of commodities, has a lot of gold, so the ruble should be overvalued. But let me put it this way. Let's say you have a unique car. If no one wants to buy that unique car is valued zero. It can be as unique as you want it, but if no one wants it, no one will want it. Now, the way the global system is structured and the way things have evolved to today, the US is the most liquid and transparent capital market in the world. And that's the benefit of the US dollar, because a country or a firm that accumulates dollars, it needs to put these dollars to work. And there's no better market in the world on a relative basis term and not on a trading basis, meaning that in the short term markets can go down. But I'm saying in terms of a structural position, there's no better and more liquid market than the US dollar market and the treasuries and the capital market system in the US. Europe tried to be that, and only Germany managed to be the Bund. Who wants to buy Greek bonds? Okay, some of them want, but they're not liquid. Italian bond, but no one, if you accumulate reserves in size, you need a liquid market, a transparent market, and something you can liquidate. So I think the US dollar being the global reserve market is not only a derivative of its demand as a trading counterparty, but it's also a derivative of its liquidity and depth in terms of capital markets, where each individual, each country, each corporation, when they accumulate their reserves, they can put it to work in the US Treasury market and get interest. And if they need to sell it, they can sell it at the push of a button. Now imagine doing that and being in China, where there are capital controls and you don't know if your money will be repatriated back. You think it will, but I guess the moment where you want to sell your Chinese government bonds, I'm pretty sure it won't be that easy to take that money and convert it to dollars and bring them back home, or euros or whatever. And now you want BRICS, it's 5 countries, right? So you want these countries, 5 countries, to trust each other when they don't trust themselves, and to accumulate FX reserves and treasury bonds of each other. And this to be a functional...
We can't even do that in here. We can't even do that in Europe.
We cannot do it in Europe. Exactly.
It's ridiculous.
We cannot do it in Europe with the euro.
Yeah.
Okay, good. And they want to do
a common European framework and a common monetary policy.
And a legal system that works and everything. It's as good as it gets. It's not perfect. There are flaws in the European Eurozone, but it's better than what we just discussed right now. There's no way in hell.
Right. I mean, that was always obvious. I mean, personally speaking, I never even entertained the whole BRICS thing. I've gotten to a point now where you see this enough. Like, there's an economy in the news business for producing stories like this, because people are attracted to them for whatever reason. They're sexy, they're interesting, and they just get regurgitated over and over and over again. For a long time, it was the euro that was going to replace the dollar.
That was the reason for creating the euro, was the goal to
take market share away from the dollar.
Take market share. And what's the market share of the euro? Like less than 10%.
Yeah. And
it's been around since 2001. And it's a system with all its flaws that it's functional. With a central bank, with one central bank, and 19 countries abiding by it. But there is a framework. And again, it hasn't dominated. So imagine if that framework hasn't dominated, the BRIC system will dominate.
What's really interesting about this is a good opportunity actually to talk about Europe and the viability of the European project. What's really interesting, one of the things that's interesting about the euro is that there was never an expectation that it wasn't going to be difficult. But the idea was that the moments that would be difficult would be the moments that would offer an opportunity to create further integration for the European Union.
Which in part has happened.
During the bull period, indeed.
And during the crisis with Greece, Europe came closer with a lot of flaws, but a lot of critical moments where you would think the euro would break. It didn't. Now, I think there is a huge milestone going forward, which I think it'll be very hard to overcome. Maybe it's not next year, but it's in 10 years. In order for the European market to go to the next level and to work, and I'm saying to work because the reason that the US is working is because someone who works in Iowa can go and work in Florida. It's not easy, but same country, same language,
It's getting harder now, but
it's
yes,
getting closer.
Totally,
Yeah, it's
totally,
getting, yeah, but
100%
okay, but you can do it.
Yes.
Now imagine someone from a Greek village to go and work in a French village in France. It's a no-go. Culturally, language-wise, it's very hard. It's very, very hard. You have to be very committed and you have to start learning the language and you have to do a lot of things. And again, it's not easy. So that's one issue with the euro. The second issue with the euro is we've had a monetary integration, but we haven't had a fiscal integration. And I find it very hard for this to ever occur because for fiscal integration to happen, you need Brussels to be controlling the fiscal policy of all the countries within the Eurozone system. If you do that, first of all, Brussels is not elected by the local countries. So as a Greek, why would someone in Brussels decide about my country? I'm putting it pretty simplistically, but I'm trying to make a point. And if you take the power of fiscal policy to Brussels, then each prime minister of each country is just a puppet or just an arm's length person from Brussels. So what? He's getting elected to do what? To just process the orders or the functionalities that Brussels say. So the interests are not aligned. The political interests of each country are not aligned with a centralized political system. So I think there will be a point where two countries in Europe, 2, 3, 4, will come to a dispute at some point where someone will say, I want to have a fiscal deficit of 10% because I'm going into a crisis. Europe will say you have to have a 3% fiscal deficit because it's what the treaty says. And someone will go to say, okay, fuck off, do whatever you think you're going to do. And there's going to be a crisis. Eventually, there's going to be a political crisis. So in an optimal scenario, in my view, this will be done in a nice way in terms everyone will go back to their currencies at the same time with a peg. There will be
to the euro.
From the euro back to your local currency with a peg for like 2 years. And it will structurally, that would be the perfect scenario.
Kind of reverse to ERM, something
yes.
Similar to the...
Yes, I think, or you'll have a parallel economic system, which will be the euro, and it will be used for international transactions. I don't know. But I can't see how Italy and Germany go hand in hand going forward. The economies are totally different. The only country that has not benefited from the euro is Italy. Greece, for 10 years, was having a party, and then it collapsed. But was having a party for 10 years. Everyone would love the euro. And then it collapsed. Okay, because we did a lot of things wrong.
We got price stability and we got cheap interest rates.
Yeah, cheap interest rates, and we leveraged too much, and we did not invest in productive components of the economy, and for all the problems we know. But Italy did not do the same thing. In Italy, if you look at the GDP per capita, it has not improved since the euro. So Italy one day will say, what the hell? Why am I in Europe? For Germany to have a lower valued euro than the Deutschmark would be in order for them to export to the world. This discussion eventually will come up. Mm-hmm. You can bully Greece in terms of size of a country. You cannot bully Italy, you cannot bully Spain, you cannot bully France. So I think that discussion is going to come up, and eventually we'll have a tough discussion on the euro.
What do you think will precipitate that conversation and that coming to a head?
I think
would it need to be an economic?
Let me give you an example now. Italy is having a discussion. Last week, Meloni came up and said that regarding the NPLs, non-performing loans, for those who don't know, it's all the loans that went bust during the crisis. And banks have accumulated those bad loans. There have been different models where these bad loans are sold to different funds in order for the banks to take them off their balance sheets, clean their balance sheets so the banks can function again. And those funds are buying it at a discount and hope to sell it at a higher price and make money, and everyone's happy. I'm trying to put it as simple as it is because many people might not understand how this works. Now, Meloni said that the owners of the loans should have the right to bid for those loans. Why should the funds be able to bid and not the owners if they can buy at a discount? Clearly, for anyone who has studied economics and anyone, this creates a moral hazard because if I know I'm not going to repay my loan, I'm not going to repay my loan, clearly. But after a 10-year crisis and after all this happened, because the people who went into this did not believe that this was going to happen, so this is an ex-post event, I think that this discussion, when it comes, you come against funds, you come against capital markets. So there is some frustration here. Politicians, and now we're going to another subject, which I think will be very interesting. since Margaret Thatcher and Ronald Reagan, and I think Russell Clark has done a few interviews on that and has, explained this, the world was pro-capital. All policies were pro-capital. I think we're shifting to more pro-labor.
Mm-hmm.
And I think it comes together with the inequalities that had happened, with the accumulated wealth that has occurred, with the crisis that's been going on. So this pro-labor rebalancing will create different clashes on different levels, either with capital markets, either with politicians, either with businesses. There's going to be, and that's a part.
That's a global phenomenon.
That's a global phenomenon, correct? And this is a part of the reason which I think inflation will remain higher than it was before the crisis. I'm not saying it's going to be high. I'm saying it's going to be higher. I think it will stabilize around 3 to 4%. And in my view, having studied economics, as I said before, and given the level of debt that we're in the world right now, maybe no central banker will ever come out and say it, but I think they would be very, very happy for inflation to stay at 4% and rates going at 2 or 3%.
Because of a set of policies that's going to put more money in consumers' pockets that would drive up the price of assets in the basket of CPI and inflation indicators?
No, the reason that all central banks would be happy is because it's the only way to reduce debt in terms of debt to GDP metrics. If you have a nominal GDP of growing, let's say inflation is 4%, and let's say growth is 2%. So your nominal GDP is 6%. So if you're growing at 6% per year, your debt, if it's not growing at nominal 6%, but it's growing at 4%, doesn't matter. You're reducing your debt to GDP because your growth is growing faster. And that's what you either have to write off debt or you have to inflate it. No central banker will come out and say it, but I think if we ever had an inflation of around 3 to 4%, everyone would be super happy because you're getting debased at 4% a year. If you're a consumer, you're screwed, but it's not a number where you feel it on a year-to-year basis, if you understand what I'm saying. Mm-hmm. After 5 years, you will realize it, or after 10 years. But on a year-to-year basis, a 4% probably will pass by and you won't realize it after it's 3 years. You won't realize it on a year. And I think that's the optimal scenario going forward for central bankers.
Does that mean higher prices for commodities but lower prices for equities and other assets?
I don't know if commodities is going to be the driver, because I think core inflation will be a bigger part in terms of wages. As I said, the pro-labor policies will increase wages, and you're going to get inflation.
And service sector inflation.
Service sector and wages, and more structural ones. And the reshoring that's happening because of the deglobalization we're going on.
But domestic investment.
Because of the geopolitics between US and China. Bringing back the factories to the US or to Mexico or to other countries is more expensive and labor cost is higher. So all this creates a structural base which is higher than it was before. So I think all this plays into why inflation can remain higher than it was before. Because in terms of commodities, and my view is that China is slowing down at a very fast pace. If China slows down, commodities will be very hard to pick up. Unless what Russell Napier has been saying, which I think is right, but I don't know when it will start, when the world going forward is more fiscally oriented in terms that there's going to be an infrastructure boost in terms to create jobs and in terms to create growth in the economy, where in that part, the West will start needing more commodities and it could rebalance. But this will take time, and this is not for next year.
Does a world where China has slowed, does that world make Russell Napier's CapEx boom more affordable because we're not competing with China at the same level for commodities?
Well,
does that make that whole process easier of using the fiscal balance sheet to reinvest?
It depends on your nominal GDP growth. If your GDP growth is 6% nominal GDP, no one cares. No one cares. You're going to get the 6%. Let me put it this way, and this is very interesting. When COVID hit the world, you had a supply and demand shock at the same time. When you have a supply shock, monetary policy is ineffective. You cannot create demand. If you cannot provide the goods, whatever price you put, you're not going to make the system work again. So a monetary policy does not work with supply shocks. It works with demand shocks. So a reason we're seeing the inflation is that because we didn't know how to react, and I think central banks did the best they knew. They threw too much money into the system, trying to figure out what the hell is going to happen and save the world. Fine. But it was a supply shock, so the money initially got inflated because even
there wasn't enough to buy.
There wasn't enough to buy.
Exactly.
Now, that's a different kind of inflation than when you have a rising wages. Rising wages might be inflationary and might be more sticky and might be more structural. But when you raise wages, you raise your
demand pull
your
inflation.
propensity to consume. So you have more money to consume, which is GDP accretive. It's not destructive. So there is a positive vicious loop on the GDP side. It's not all that destructive. And that differentiation needs to be clarified because a lot of people hear inflation and not all inflation is the same. I think the Federal Reserve of San Francisco published a research paper last year, and I can send it to you if you want, which they found that 2/3 of the inflation was because of supply. Which is not something the monetary system can do anything about it.
So to that point, that raises an interesting question, which is if monetary policy and fiscal policy were not the major drivers of the inflation in 2020 and 2021, have they been the major drivers of the disinflation? Or were they largely participating in a cycle that was driven by other factors?
You overflowed an economy with money. And the problem was it was unproductive money. You were getting paid to sit at home, which means you were sitting at home and buying stuff on Amazon, simplistically saying it. But so if you give money which is not used for productive reasons, it's going to be inflation. It's different to take money, build a factory which creates jobs, creates demand, and creates a product. And it's different to give you money to spend it. This differentiation is very important in terms of how inflation works. And I think when central banks threw all that money into the system, they got so scared because they had never seen something like that before. And I understand it. I'm not criticizing them. Maybe they should not have kept it so long. Fine. But again, it's better to have thrown more money than less. I don't think any politician wants anyone being hungry. I understand all the problems that they're facing. And they've been mistakes, don't get me wrong. But again, it's easy to talk about their mistakes here with a cup of coffee and the two of us without any risk on our head and no one looking at us. And it's totally different than being in the storm, in the eye of the storm. There's a great documentary, and I think people should see it, and I think it's very fascinating. After the 2007 crisis, when what happened with Lehman and everything, Hank Paulson, the head of the Treasury, made a documentary, and it's called 5 Years After the Brink. People should look it up. And the documentary starts with him sitting in a chair, talking to the camera and saying, I'm doing this because in the future, someone will have to go and will have to go through what I went. And I want to say what I went through and how hard it was to convince politicians of what was happening and to educate them in live time to make these policies go by. And the documentary is fascinating. You will see how many times, because if you're a capital markets person, you understand perfectly in front of a screen what's happening when yields go by, when the TED spreads, all these numbers and things, when bananas and when there's no liquidity and when the bank calls and says, you're not trading with Morgan Stanley, you're not trading with Goldman Sachs, you're not trading with Citi. With who the hell I'm going to trade? But everyone's cutting credit. And as a politician, you don't...
It was a cardiac arrest.
And I'll tell you, yes, but they didn't know. I'll give you an example. The crisis in Greece hit Greece in 2010. In 2008, when the world was collapsing, Greece was doing fine because the narrative was that the Greek banking system was fine, which was fine. The economy was the problem, not the banking system. Greece did not have a banking crisis which triggered an economic crisis. Greece had an economic crisis which destroyed the banks. It's the other way around. And I was going out to people and I couldn't sleep and I was white. I was explaining to them that the end of the world is coming. And they were like, man, get a grip. You're over-exaggerating. I'm like, guys, the whole thing is coming down. They were like, dude, relax. This is not happening. All places packed, going out, clubs, everything in Greece, there was like, we're in La La Land. And I could not convince anyone. And I understand that if your daily life is not in front of a screen and reading all the things that we read, why you might think that this is an exaggeration. So I would urge anyone who hasn't seen to see that documentary. It's fascinating. It's fascinating. And it has given me a perspective to understand how hard sometimes is to convince the political system of the changes that are occurring and the effect they have in the economy when some of them have not spent the time, which I understand it's not easy to do and you have other things to do, and understand how the mechanics work on all these systems. Yeah, it's mind-boggling.
So I'm going to move us to the second hour, Michael. We didn't have a chance to talk about yields and the effect of this kind of inflation on the cost of government debt, not necessarily real term. We could talk about that also, the real cost, but also the nominal. And what countries are most vulnerable, what fiscal balance sheets are most vulnerable. We also didn't have a chance to talk about China, which is something I'd like to discuss in China's economy because it's in the news a lot now. Are concerns about China's economy overblown, or is China about to enter what some people might say a multi-decade period of deflation or stagnation? Also, when it comes to Europe, one thing I do want to talk about before we close that conversation is national security and what role that plays in the future of European security, and then geopolitics overall. And, I think the single biggest worry that people have beyond even Ukraine, Russia, is this concern that whether it's Taiwan or whether it's something else that sparks a conflict between the US and China, that's the really big X factor, right? Like that, and maybe nuclear war with Russia. Putting those two things aside, I'm not even getting into existential threats around AI and climate.
Okay.
Those are the big sort of, socio-political concerns that people have that could derail what otherwise could be a pretty awesome future for humanity. So for anyone who's new to the program, Hidden Forces is listener supported. We don't accept advertisers or commercial sponsors. The entire show is funded from top to bottom by listeners like you. If you want access to the second hour of today's conversation with Michael, head over to hiddenforces.io/subscribe and sign up to one of our 3 content tiers. All subscribers gain access to our premium feed, which you can use to listen to the rest of today's conversation on your mobile device using your favorite podcast app, just like you're listening to this episode right now. Michael, stick around. We're going to move the second hour of our conversation onto the premium feed. If you want to listen in on the rest of today's conversation, head over to hiddenforces.io/subscribe and join our premium feed. If you want to join in on the conversation and become a member of the Hidden Forces Genius community, you can also do that through our subscriber page. Today's episode was produced by me and edited by Stylianos Nicolaou. For more episodes, you can check out our website at hiddenforces.io. You can follow me on Twitter at Kofinas, and you can email me at info@hiddenforces.io. As always, thanks for listening. We'll see you next time.